going through that financial action plan, really looking at how we can all deal with debt. And actually, that's going to be relevant for everybody, whether you're in debt or not. And then we'll finish off by bringing it all together. I've sort of done a crib sheet of all the actions to go through. And then at the end, if Dawn's on the call, then I'll be introducing her from the Money and Pension Service so that she can tell you a little bit more about the service they offer too. But I think before I just move on, and look at managing our finances, it is important to say that having credit or debt can be just a very normal part of managing our everyday finances. Many of us might have had student finance in the past to help us through university. I'm sure most of us have got a mortgage, which we needed to buy a house, or we might use credit for things like cars and phones, which we pay off monthly because it's just made that item far more affordable for us. So the message here is that debt and credit doesn't have to be a bad thing as long as we're using it sensibly and we can afford to make those repayments each month. When debt does become a bad thing is when it starts to get out of control, and we start to struggle with monthly payments. It's at that point that debt becomes the worry, and then it can have that impact of really impacting on our happiness. Now, fortunately, the really good news is that there are no money problems that are unsolvable. Although dealing with them might sound difficult, it might feel uncomfortable. Actually, if we can take that step and start dealing with debt, it's much easier and less stressful than just leaving it there to fester. So the other important message here is that nobody has to struggle alone. There is help out there, and we're going to be looking at what that is if people need it. Sharon, I'll just pause. I'm assuming no one's had any questions yet. You just let me know, just interrupt. I'll pause at the end of each section to give you that chance.
Yeah, nobody's asked any yet.
So. Okay, lovely, thank you. All right, so one of the first things that we should understand is the difference between being in debt discomfort and debt crisis. Now, if somebody's in debt discomfort, they've probably got some debts, probably more than one, but they're still at that manageable stage, even if the person's just affording to make just the minimum payments every month. If you're in debt discomfort, you're probably still getting emails through offering additional finances, new credit cards, things like that, but you're starting to worry about it and thinking, how am I going to pay this off? Have I got enough? How am I going to pay more than the minimum? And debt discomfort is where it starts to affect your personal relationships because it's causing that worry and that stress. So that's debt discomfort. Now, if someone's in debt crisis, they're also going to have debts, probably more than one, but they've got to the stage where they can't afford to even make the minimum payments and they don't have enough money coming in to cover their bills. Maybe credit cards are maxed out, they're missing minimum payments because they can't afford them. And all of those offers of new credit and credit cards are starting to dry up, and it's the stage where you really feel like things have spiraled out of control. It's affecting your day-to-day life and you don't see the end in sight. That is what debt crisis is. Now, regardless of which category somebody falls into, there is help available, but the solution is going to be slightly different depending on debt discomfort or debt crisis. And we are going to be covering both today. But regardless of where somebody is on that debt scale, the first thing really to encourage anybody to do who's in debt is to help them to understand the full extent of what they owe. And the easiest way to do that is to put it down on paper. And I know that that's the bit that might seem uncomfortable, but it's the easiest way to just think, right, this is what I'm dealing with. It can seem daunting, but it's a way of taking control. So I've just put an example template here with the important columns that people would need to write down. So as a starting point, how much do they owe, on what debt, who do they owe it to, what is the minimum payment that they have to pay every month, and really importantly, what is the interest rate on that debt and when does it need to be paid by? Now, the interest rate is shown by the annual percentage interest rate, or APR, as you might have heard about it. And the APR by law has to be shown on any credit agreement or loan statement or credit card statement that we get. And the APR is the interest that somebody pays if they've got an outstanding balance every month. Now, every card, every loan has to declare the APR. They have to include all of their standard fees, because actually then when you write them down, it's really easy to see which debt is costing you more. So the simple rule, the higher the APR or the annual percentage rate, the more interest you're paying and the more that debt is costing you. So that's why it's important to work out what the APR is on all the debts that somebody has. Then once that list has been made, we need to look at that final column, whether that debt is classed as a priority debt or a non-priority debt. So let's just look at the difference. Now, priority debts don't necessarily have to be the largest or the most expensive debts, but the priority debts are the ones that carry the most serious consequences if they're not paid. So by that, mortgages and rent, because obviously you don't want to lose your house if you're not keeping up the payments. It could be court fines, because of course you could then get more fines if you're not paying them, or even have to go back to court. But there's other things like council tax, gas and electricity, TV licence, because there's £1,000 fine if you watch TV without one, child maintenance, income tax, national insurance. So all of those have got serious consequences if you don't pay them, which is why they're under the priority debt list. So the most serious consequences. The next one on the right hand side, these are the non-priority debts, and they have less serious consequences for non-payment. But if they're repeatedly not paid, you could find debt collectors at your door, which is just going to create more stress. So non-priority debts include things like overdrafts, loans, money borrowed from friends or family. It could be catalogue or in-store type credit debts as well. So encourage anybody, yourself or somebody else who's worrying about debt, to write their list of debts, make sure they know those annual percentage rates, and then class them as priority or non-priority. And as you'd imagine, when you're concentrating on paying off debts, you pay the priority ones first, then the ones with the highest interest rates, and so on. And we'll be looking at how you do that in a minute. So once the extent of the debt is known, once they've been ordered into priority and non-priority, now we can look at the financial action plan to find ways to pay that debt off. And as I said before, this action plan really is the way that all of us should be managing our finances anyway, on a day-to-day basis, even if we're not in debt or in financial difficulty. It's just really good habit to get into. But of course, the plan is particularly relevant for those people in debt discomfort. If you're dealing with somebody who's really hit debt crisis, then they're going to need some help pretty quickly from a qualified debt advisor. And we're going to go on to talk about that after we've been through the action plan. But the first stage of any financial action plan, particularly when you're trying to pay off debts, is to stop borrowing. Now, it sounds really obvious, doesn't it? But there really is no point trying to sort out existing debts if you keep adding to them, and there's always a thing, I can't pay that minimum payment, or I can't pay that, I'll just borrow a bit more to pay that, and then the debts just spiral, and that's how people go from debt discomfort to debt crisis. And we're going to go through each of the points on this debt action plan one by one, but number one would be to stop borrowing and just draw a line in the sand and work out what you're going to do. Step two is to work out your budget. So that's to get a handle on what you're spending every month, what cash you've got coming in, and to see whether that cash coming in is actually covering what you've got going out. And of course, if you can get the income to cover the outgoings and you have a little bit left at the end of each month, that is what can then be used to start paying off debt. Now, when you're working out a budget, you really should be writing down absolutely everything that you spend in a month to identify where the money is going. And the easiest way to do this is, I call it the bank statement challenge, where you pull out your bank statements, probably for the last 2 to 3 months, not just the last one, and just go through line by line to make sure that you've remembered everything. Because it's, it's easy to remember, I know what my council tax is, or I know what my rent or my mortgage is. But do you remember every time you pop to the local shop for a pint of milk and end up spending £20? And it's that kind of spending that really needs to go onto the budget plan, so you can identify where the shortfall's happening and maybe the kind of spending that you can stop. Or maybe a bit like me, it's just so easy, isn't it, on Amazon? I just need a birthday present, or I just need some more sellotape, or whatever it is. So yeah, the real key here is to get as much as you can down on paper. It is best to try and break down all figures into monthly costs, because you can work out how much life is costing you on a monthly basis. So things like birthday presents, holidays, Christmas, if you can try and quantify what you're spending on those across the year, then divide that by 12 and work in for each month. Right, I know, let's just take, for example, Christmas is going to cost me an extra £600. So actually, I'm going to budget for that £50 a month, because 50 times 12 gets you to the 600. Because then you know you're not missing anything. Now, there are lots of tools available online to help people with budgeting, lots of apps out there. But if you want a free budget planner that you can write down, we've got this one that I've shown on the slide on the Better With Money website. Personally, I'm a bit of a paper girl. Maybe it's my generation. I fill it out and I stick it on my notice board. But we do have an interactive version as well, which you can access through our website or through the Money and Pension Service, because the one we've got on our website, we've pulled through. It's a great tool that the Money and Pension Service have designed. Now, if you are helping somebody else with putting their budget together, or in fact you're doing it yourself and you live with a partner, just encourage anybody, if they're living with somebody else, to do that budget together, because you're going to be spending costs together, you're going to be dealing with debts together, and the sooner you can start having the conversation about, you know, what you've got coming in, what you've got going out, and getting some honesty around the money, the far less likely people are to fall out about money. I mean, I think it is still the biggest cause of divorce and breakups at the moment. So trying to be honest and make sure each other knows about where you are is the best way for financial well-being. Now, once you've apologies, I've totally just lost my place there. So I was trying to change the slide and it's done something very strange on my screen. So bear with me just for a second. Right, so once you've actually done that budget and you've worked out where your cash is going, the next part of it really is to see if there's anything, you know, what can you do to reduce your outgoings? Is there anything that you can do to reduce that non-essential spending? Things like, you know, do you have magazine subscriptions coming through the door and you don't read them, they go in the bin? Have you got a gym membership, but actually during lockdown you found that you quite liked exercising in your garden or having a walk around the block? Is it that you're paying for Sky Movies but you're watching Netflix? It's all of those sorts of things. Have a look to see if there's anything you can cancel. But then systematically, you know, going through your budget, start looking at your bills. Is there a way that you can get a better deal? You know, have you reviewed your car insurance? Do you know what you're paying on electricity, for example? Now, I find when I'm reviewing my bills, the best thing to do, first of all, because you'll know how much you're paying at the moment on a monthly basis, because it will be on your budget planner. Then go to a comparison website, and there's loads out there. You know, you've got USwitch, Go Compare, Money Supermarket. And just do a comparison. See what the best price is that you can get from another provider for the service that you've got, so for the same level of service. But rather than just switch automatically, always go back to your existing provider and just say, look, I'd love to stay with you, but I can get this cheaper somewhere else. Can you match it? Often when you ask them that question, they will do. And it's far easier staying with the provider you're with than having to switch to somebody else. Of course, if they won't match it, then you know who you can get a better deal with and you can go ahead with that. And the same goes for insurance, home contents, car insurance. Again, do that comparison, contact the insurer, see if you can get that down. I mean, I did it recently on my car insurance. I only went to 2 other providers. It took me about 10 minutes and I managed to save £100 by going back to my existing provider and saying, look, I've got a better deal. It's with this company. And they said, fine, we'll match it, because they don't want to lose you. But while I'm talking about this, of course, we cannot ignore the elephant in the room, which unfortunately is energy prices. There's been lots and lots of stuff in the press about this. And the reason being is that the energy price cap is rising in April. So that is the maximum that an energy company can charge you for a unit of energy. And that price cap is increasing by 50%. So that's massive. So for the average household, that means that utility utility bills, so for gas and electricity, is probably going to go up by about £150 a month. And I have heard a rumour that there's going to be a few providers that are going to be increasing their prices more than that, or their average price from where they are at the moment. Taking into account that there's going to be this energy cap. I think it was OVO, and it might be because their prices were low before, but in some cases their prices could be going up by 300% because they're still within that energy price cap. And OVO are the third largest energy provider after British Gas and E.ON. So if you know anybody who's with an energy company that's gone bust, the best thing for them to do is just to stay there for the moment, because they will automatically be switched over to another provider. Once they're at that new provider, then it's worth seeing if there's any particular deals or tariffs they can go on, or at that stage looking at any other companies. Now, I particularly use Utility Warehouse, and I do know that they are accepting new customers at the moment. I was speaking to them the other day, and they have promised to try and keep their prices as low as possible. So that might just be one provider, if you're having problems with your energy company, to look at and make that comparison between the energy prices. But this is really going to impact people this year. The cost of living is going to go up. The cost of keeping warm is going to go up. And we just need to be aware of that, because it could be affecting us and people around us as well. Now, talking about comparing the market, if you're sitting there thinking it's all very well, Sarah, but I'm a busy person, I've got lots to do at work, I've got kids, whatever it might be in your life, I don't have time to do it. The good news is that there are companies out there that will do it for you. You can sign up on their website. So you've got people like USwitch, I think there's Flipper. Often people tell me that they've used them and they're great. And of course, they do receive commission to switch on your behalf, but they get the same commission from any provider they switch to. And if it is a choice between you're just not doing it because you haven't got time and getting one of these companies to do it for you, get a company to do it for you, because at least you know then that you're going to be getting the best deal. Because if you let all your insurances and things roll over, the price just goes up and up and up. Another thing to look at is food bills. So according to Money Advice Service, 60% of people that make a food plan, sorry, I'm going to sneeze, I think now. It's all happening. No, it's gone away. Right, 60% of people that make a food plan will spend less on their groceries. Again, we've got free food planners on the Better With Money website under the Employee Resources section. But just think about other things, like you can actually save 30% on your shopping by going down one brand. So if you're buying a premium brand, just go to the Shop Own brand. If you're using the Shop Own brand, can you go to their sort of, what do you call it? They've all got different names, but kind of the saver type brands. You can actually save a lot of money by doing that. I mean, during lockdown, we moved all of our cereal, because we've got 4 kids and they just eat and eat and eat cereal. We moved from the premium brands like the Kellogg's to the Shop Own, and we all preferred it, actually. It was amazing and saved lots of money. Another thing to think about is what discounts you have available to you. Do you get access to retail discounts or shopping discounts through work? If you don't, there are some other discount websites out there, and my absolute favourite is honey.com. I don't know how many of you use that. Honey is a free internet browser extension. It automatically finds and applies coupon codes for you at the checkout if you're shopping online. You do have to register for the service. You do have to allow the extension to be added to your internet browser. But as soon as you're shopping online and you get to the checkout, you'll get a pop-up from Honey to say, we found some coupons, we're going to apply it. So you don't even have to try once you've set it up. It's brilliant. And if you use it on Amazon, it also tells you if that item's been cheaper in the last 30 days, so you know whether you're picking the right time to buy it or not. So do take a look at that. The last thing I wanted to mention on this sort of how to reduce your outgoing slide is council tax. And just check, whether you're getting all of the discounts that you're entitled to. For example, if someone's living alone, they're going to be entitled to that single person discount. If they've got any full-time students in the house, they're not applicable for council tax. And you could get a reduction if you've got somebody in the house with an illness like dementia or Alzheimer's. So just worth checking, are you on the right council tax band, and have you got the reductions that you're entitled to? So a few ideas there as to how you can start to reduce monthly costs. The next part of the financial action plan is to make sure actually you're getting all the income that you should be getting. And there's a few things to look at. Firstly, you know, are people getting the state benefits they're entitled to? I think there's a huge, they publish it often, there's a huge number of people that are not claiming benefits they can have. You know, things like universal credit, which is designed to help with living costs. The standard allowance for that is just over £400 a month. Now, the easiest and quickest way to see if someone is getting the state benefits they're entitled to is to go onto this website, entitled to. Someone will fill out a questionnaire about their personal circumstances. When I did it, it took me about 10 minutes. And then it tells them whether they're entitled to any state benefits or could be. At that point, if it says that you are, you then go onto the gov.uk website and apply for it there. But because there was an 81% increase in people claiming benefits, it's well worth doing that eligibility check before somebody gets into that process. Next thing to see is, are there any grants out there that could help you? You know, lots of organisations have set up charitable funds that give grants for people in financial difficulty, and obviously with grants you don't have to pay them back. Another really useful website here is the Turn to Us website. It holds details of over 1,700 grants, and again, you fill out a questionnaire and it will tell you whether they think there's any grants out there that you're eligible for. Next one, which I don't know if people do often enough actually, is just to check whether they're on their right tax code. Now, all of us, the standard tax code in England is 1257L. And what that means is if you add a 0 on the end, it means that most of us can earn just over £12,500 a year before we start paying tax. If our tax code is not 1257L, it's just worth checking, going to HMRC online as to why that might be and whether it's correct, because none of us want to pay too much tax. I heard a sound. Has somebody got a question, Sharon? No, maybe just somebody came off mute.
That was somebody joining, but there is a question which we can visit at the end of your section if you like.
Yeah, okay, I'll just cover the next two and then we'll go back to that.
Brilliant.
So yeah, checking the tax code's correct. The other one, and I think most people are clued up to this now, is that during coronavirus, during the pandemic, the government said that actually everybody, irrespective if you've only worked from home one day in the entire tax year, you are allowed to claim a working from home tax relief for the entire year. And you can do that. I've put the website there on gov.uk. Now, for a basic rate taxpayer, so that's somebody that earns under £50,000 a year, it's worth about £62. But if you're a high rate taxpayer, you earn over that 150, it's probably worth about £125 for you. You know, it's well worth doing it. Don't not claim it, because all of that money can help. You won't necessarily see a check in the post, but your tax code will be adjusted to make sure that you pay less tax for the rest of the year to get that working from home tax credit. The last one I've put on here around maximising income is the rent-a-room scheme, which is offered by the government. And what this does is it allows you to rent out any furnished accommodation in your home, and anything you get for that up to £7,500 a year is tax-free. And you can let out as much of your home as you want. But remember, if you, let's say you're living by yourself, you do have a spare room, if you do get somebody in, then you won't get the single person discount on council tax. But again, few ideas here. Are you maximising getting the most income that you can? Because obviously what we're trying to do is get as much income as we can to start paying down those debts. Yeah, Sharon, let's take the question now.
Okay, so the question is relating to the electricity hike.
Yeah.
So Zoe's asked, once the April price cap rise comes in, would it be worth switching from then to a fixed rate?
Yeah, it's an interesting one. And do you know, I was reading an article on this morning, but sometimes when you go on to a fixed rate, you pay a slight premium because, of course, the energy company then can't increase that over the year. So sometimes they're almost future-proofing the price. And Martin Lewis had done an article to say, actually, lots of people that are on fixed prices have lost out. But, you know, it's a bit crystal ball gazing, really, isn't it? If you feel that there is a fixed price deal out there that is considerably better than the price cap, and you think that even if prices were to change in future, you're still going to make, then absolutely go for it. You know, the good thing about fixed fixed price deals is it gives you certainty. And if that is a fixed price deal that you know you can afford for the rest of the year, then that would be the reason to do it. But just don't be tied in thinking that fixed deals are always the cheapest, because they're not. Do make sure you do that comparison. But yeah, great question. But as usual, it's sort of it might be, it might not. It will just depend on the company and the fixed deal that they're offering.
Thank you, Sarah.
No problem. Okay, so let's just move to the next stage then. So you've put together your budget. You've seen what's coming in and going out. We've looked at ways to try and reduce your monthly costs by doing reviewing and looking at energy costs, for example, and we've looked at maximising income. So at this point, we should have a really good idea of whether we've got any money left over at the end of the month that we can start paying off towards the debts. This is the point that you then go back to that list of debts that you put down originally and identify, right, I need to pay the minimum on all of these debts, but actually if I've got a bit extra, it's those priority debts and the ones at the top of that list that I need to start paying first. Because what far too many people do is split the amount that they can afford and repay the debts equally. But that's a bad tactic, because if you're paying off the lower interest ones first, you're going to end up paying more interest on the ones higher up the list. So yeah, just shift focus, pay the ones at the top, and then once they're paid off, you shift focus down to the next one, and so on and so on. But I just wanted to show you the effect of, often if people get into credit card debt, they'll just pay the minimum and keep going. And that's OK. At least you're not defaulting on the payments and you are making the minimum you need to. But I just want to show you the effect of paying more than the minimum if you can afford to do so. So I've used the debt calculator, which is on the Money and Pension Service website, and you're free to use that as well. You can access that through Money and Pension Service or through Better with Money. But so what this one shows is you've got a credit card. It's got a £2,000 balance, and there's an interest rate on that of 20%, which is quite normal for a credit card. And the minimum payment is £40 a month. Now, if you pay that £40 a month, it's going to take 8 years to pay off that £2,000 debt. If I decide I'm going to pay £8 more a month, taking it up to £48, actually what this debt calculator is telling me is I'm going to pay it off 18 months more quickly and save myself over £600 in interest. So as you can see, just paying a tiny bit over the minimum can be a really good strategy and save you a lot of money whilst you're doing it. So I just wanted to bring that to your attention. The last point on the debt discomfort action plan is to consider switching your bills to direct debits to make sure that payments aren't missed, because missing payments can have a detrimental effect on somebody's financial history. And what that can do, if lenders see that people are missing payments, it can negatively impact their ability to get credit in future, which then might impact again on their financial happiness and their ability to live life as they want to. So they're the 6 main actions. But of course, there's one thing whilst you're doing all of this that's really important, and that is to try to cut the cost of your debt. And there's a number of ways in which we can do that. Now, the first thing that I alluded to just then was around your credit score. And I would encourage everybody to check their credit score if they haven't done already. And you can do that through free credit score apps like Experian or Credit Karma. You just download the app, you fill in a few questions and it will pop up with your credit score. And not only that, it will show you all of the information that the credit reference files hold about you, so you can see whether you are seen as a good bet from a lender's perspective and whether you're seen as a responsible borrower. So that's the first thing to do. The next point is, whilst savings interest rates are so low, we had interest rate cuts back in March 2020. They've increased very slightly now, but the best case scenario, if you're saving money, is you're probably getting about 0.5% interest on that money. So it really is worth it now to use any savings that you have to pay off that high interest debt, because it is going to save you money in the long run. And then for those people that have got their credit score and they've seen that they've got a good to excellent credit score, there may be ways that you can consolidate debt so that it's all in one place and you get a cheaper deal. And there's 2 main routes for doing this. The first way is to apply for a credit card that allows you to transfer balances from loans or credit cards to them, and then they guarantee you that they won't charge you any interest for a set period of time, and that's known as a balance transfer. The better your credit score, the more likely you are to be approved for one of these 0% balance transfers, and the longer the 0% deal will be. And at the moment, when I looked, you can get, if you've got a good credit score, kind of 20 months interest free. So it just gives you that time to start paying off that debt while you're not paying any interest. But the golden rules of balance transfers: don't miss a monthly payment, try to pay that balance off whilst you've still got that 0% period, and don't withdraw cash on the card because that won't be at 0%. Alternatively, if someone's got a higher level of debt that's more than £5,000, the best thing to do is to look at a cheap long-term deal. Taking a loan of between £5,000 and £25,000, normally you can get an interest rate of about 2 and 4% at the moment. But what I will say is, if anybody is going for a new credit card or a loan, just do an eligibility checker first. They're on most of the credit card websites, because you want to make sure you're going to be accepted for that deal, because if you apply for a credit card, you get turned down, you're less likely to be accepted for finance in future. Now, if you're sitting there thinking, well, it's all very well, but either me or the person I'm dealing with has got a low credit score, what can I do? Sometimes, if they've already got an existing credit card, phone them up, say, have you got any offers? If I shift some of my other debts to you, will you give me a 0% balance? Sometimes they do have hidden offers, so it is well worth asking. Number 4 on here is just looking at remortgaging. Because interest rates are so low, if somebody is out of a fixed period on their mortgage, they might have the interest rate might have flipped up. Just see whether they can remortgage to get that interest rate down. They could, at the same time, ask for a little bit more money to pay off any debts that they have. Now, that could seem like a good idea, but what you have to remember is that a mortgage is a loan secured on your home. It is a priority debt, and if those mortgage repayments go up because you've borrowed a bit more to pay off other debts and you can't pay it, then your house is at risk. The last thing on here, and back to the utility providers, many of them now have got some help available and grants. If people are really struggling with their bills, they don't want to cut off your gas and electricity, it really does have to be a last resort. So do encourage people to ask their utility providers if there's any help available to them. So really that is, really a summary of what we should all be doing on our financial journeys anyway, but if somebody's in debt, to follow that plan to see whether they can free up some money to start paying it off. Right, the next thing I want to do is just think about debt crisis. But before I do that, Sharon, have we had any more questions through?
Yeah. Good timing. Could you please explain the cheap long-term deal bit again?
Yes, so there's 2 things that you can do if you've got lots of different credit cards and loans and all the rest of it, and if you want to try and get the cost down. The first one, if all of your debts added together comes to less than £5,000, look at getting a credit card that will accept balance transfers, so it will take on debt from other places, and normally they will say, if you transfer that debt to us, we'll give you a 0% period. So that's a time that you can transfer it and you don't pay any interest on it at all. So that would be the first thing to look at if you can do that, because obviously that's going to save you a lot of money on interest, and hopefully you can start paying it off monthly and clear that by the time your 0% period's over. The second option, if your debt is more than £5,000, look at a long-term low interest loan. There's lots of loan providers out there. You can look on the Money Saving Expert website for all the cheapest loans. And what you might find is, if you've got a credit card that's £5,000 and you're paying 20% interest on it, you might be able to transfer that to a low interest loan of about 2%. So you're cutting that interest right down, and then you pay it over 5 years. And so you've got what you're paying each month, and it gets paid off. So they're the 2 main routes if you're looking to kind of consolidate your debt and bring it down. So I hope that's helped.
Thanks, Sarah. That's the only question that's come in so far.
Okay, so the next thing I just want to, so, that's sort of dealing with debt discomfort and what all of us should be doing anyway with our finances. If you're dealing with somebody who's in debt crisis, they're going to need immediate action and to get some help. So by debt crisis, just as a reminder, they might have spiraling debts, they can't deal with it, they can't make the minimum payments. It might even be that their debts aren't that high, but mentally they're just not feeling strong enough to get to grips with that. And if this is the case, then it's time to reach out to a debt advisor. Now, there are many companies out there that will email people about debt services, but I would really warn people against these. Adverts for debt services are often companies that are going to be getting commission. They're trying to push products to you. They might say that they can write off your debts. It's very unlikely. You have to be really careful with those. Instead, I would strongly recommend that you encourage your employees or your friends to contact one of either their employee assistance program, which they might have offered to through work, and if they don't have one of those, directly to one of the non-profit debt counselling organisations. And I've given a list here, but you've got Citizens Advice Bureau, Step Change, National Debt Line. They've all got qualified debt advisors whose job it is to help people, not to make money out of them, and they do provide their services for free. Also on the websites, it's not just that, they have fantastic resources as well, so that if people want a bit more information about how to help with the debt themselves, they can do that. Now, a debt advisor, their role, they will treat everything in confidence, so you can rest assured they're not going to tell anybody else about what you've spoken about. And they're really there to give advice about the best ways of managing money. They'll go through that debt action plan that we've spoken about today. But the most importantly, it doesn't matter how big or small the debt is, they're there to help you, and they'll check that you're maximising your income and you're reducing your outgoings. But most importantly, they're going to deal with lenders on your behalf. So, if you really can't deal with all the letters coming through the door, they will contact your creditors. And, it's just the way of the world. The creditors do tend to take debt advisors far more seriously than individuals acting alone. And the really important thing is that under the Financial Conduct Authority rules that are set out, once somebody has reached out to get debt advice from one of these regulated firms, then the people you owe money to have to stop chasing you for 30 days. So it gives you that breathing space to really get behind it and sort it out. So the kind of immediate actions that a debt advisor might advise on, first of all, is they will make sure you've got a safe bank account. And by that means a bank account with a bank that you don't owe money to. Because if you do owe money, let's say you're in overdraft and the bank has said, right, we want you to pay back that overdraft. If you have your salary paid into there, potentially they could take that money and say, right, your overdraft is now finished. So a safe bank account is one to somebody you don't owe money to, and you're in control of who you're going to pay off first. The next thing the advisors will do is to send all of your creditors a hold action letter to let them know that you've reached out about your debts, that they are being dealt with, and to ask them to give you time to work out what to do next. And these will be sent to all the lenders that you owe money to. People can send these letters themselves, and this is an example of one that's on the National Debt Line website in case people want to do that themselves rather than go to advisor. The other sort of thing the advisors do is just check that you haven't got any payment authorities that you don't know that you had in there. Sometimes when you sign up to store catalogues, in the small print, you can give authority to companies to take money from your debit card or credit card without you knowing, so that you pay their bills. These can be stopped via the bank. So again, the debt advisors will just have a little look at that. Now, once they've helped the person in debt to take all those immediate actions, then they will work through the budget to see the affordability of the debt and the order in which they should be paid, which we've gone through. But then they do have some options available to help that individual to pay off that debt based on their situation. So I've put a whole list here, but I just thought I'd run through the first two, the debt management plan and the debt relief order, because these are the two most common solutions that a debt advisor would help with. The first one, the debt management plan, this helps people to pay back their debts at an affordable rate. In effect, like we were saying, getting your own balance transfer card or your own low-cost loan, if somebody hasn't got a good enough credit score, is not being offered that, then what a debt management plan does is bring all the debts together under one plan so that the person makes one affordable monthly payment to that debt management plan provider, and then they deal with all of the other cards and pay them off. So this route is suitable for people that have got non-priority debts like credit cards, store cards, overdrafts, things like that. The next one is the debt relief order. So this freezes debt for a year. And then it can write it off completely if somebody's circumstances haven't changed. But a debt relief order can only be applied for by an intermediary, like a debt advisor on somebody's behalf. It does cost £90, and most of those charities I've named earlier would be able to do this. But the rules on debt relief orders have changed recently. You can apply for one of these if your debts are less than £30,000. You have less than £75 left after each month, after you've paid off all your bills, and you don't have more than £2,000 in savings. And the good news about debt relief orders is they can be used for the priority debts as well, things like money owed to council tax or to the taxman as well as the non-priority debts. So, my main message here is, please try and encourage anybody who's struggling with debt to go and see a debt advisor, because they'll be able to help them. They'll look at their circumstances. They'll discuss the best options for them. And 80% of people that reach out just feel far more in control and happier after doing so. It just helps people to take control and get back their money. I actually had a friend who's just finished paying the last month of his debt repayment plan, and his life is transformed over those 5 years. And he said, I've got my life back, I'm happy again, and he was the first to admit that he did seriously consider doing something horrible because he didn't know how to get out of debt. So he reached out, and he went to Step Change, and it has changed his life, which is just a brilliant good news story. So we're just bringing it all together. We've covered loads of information today about our relationship between money and health and happiness, and how we can tackle debt, and the pointers that you might be able to give your employees and other people as well if they come to you with debt problems. So I've just put it all here. So if there's one slide you go back to, it would be this one, and kind of go through them step by step and cross them off. I've also put a few further resources here. If people are being harassed by debt collectors, you can look at the National Debt Lines fact sheet. If somebody wants to make complaints because they feel like they're being hassled to pay back money, you've got the Financial Ombudsman, and I've put the phone number there. And if there are people that are, loan sharks, we often hear about them. Loan sharks are often people it's people that have said, oh, I'll lend you some money, and then start demanding payments back, and those payments go up, and they start threatening horrible things. That is a loan shark, and if anybody's struggling with those, there is a line where you can report these people. Now, it isn't illegal to borrow money from a loan shark, but it is illegal to be a loan shark. So, just rest people's minds at rest that they're not going to get in trouble for reporting that they've borrowed this money. And lastly, you can look at the Money Advice Services Navigator tool and Step Change's Debt Remedy tool as well. Right, we've got about 10 minutes left. Is Dawn on the call?
Yes, I am here.
Perfect.
I've been listening. I knew you couldn't see me. It's fine. So, hi, Sarah.
Hello. I just thought I'd hand over for you to give a bit more info about who you are and what you do.
Yeah, so thanks very much, Sarah, for giving us just a very quick opportunity to talk to everybody. Just to say, Sarah has referred to the Money and Pension Service throughout the presentation, and for those of you that aren't aware of the organisation, it's an arm's length organisation linked to DWP, and it's funded through the financial levies that the large financial institutions pay. So basically, if you go to the Money and Pensions website, you know that you are going to a trusted source. It's DWP backed. They want to make sure you get the help that you need. And so the Money and Pension Service are the people that will do that. I'm the regional manager, actually for the East Midlands, but I'm covering the West Midlands as well at the moment. And the site that, so the Money and Pension Service is a bit like an umbrella organisation, really. And sitting beneath that is a website which is aimed at consumers. So people like yourselves, it's aimed at me, it's aimed at Sarah, it's aimed at everybody. And it's called Money Helper. And again, Sarah has referred to Money Helper throughout this. So if you remember one thing, just remember that the website to go to for help would be the Money Helper website in the context of what we do. And I just wanted to pick up on a couple of things you said, Sarah. So while you were doing the presentation, I was sent a link to a new page that we've just put onto our website, which is all around energy. So there is no surprise there. So what I will do is I'll put the link into the chat so that people can then have a look at it, because it's really, really helpful. And what it then does as well, it gives people a window into our website to see everything else that we cover. So under Money Helper, as you know, we cover, you know, everything from people who are working and just need help and support around managing their money, through to claiming benefits, through to people who own their own business, everything in between, and everything that, you know, you can think of to do with finances. Just a couple of other things. So debt provision that Sarah has referred to, I would completely agree with her. You do need to go to generally not-for-profit organisations. And just to say that our organisation is the biggest funder of debt provision in the UK, and we fund a lot of the debt advice services that you'll come across. So things like your CABs and all of the people that Sarah mentioned will be funded through us. So they're really good places to go to. And, you know, I would really recommend that. And then just finally, just a personal thing from me, really. I went on to the tax site, government site, because I was looking at my working from home allowance, and I sort of assumed that it had just automatically happened, and it doesn't. And there is a microsite which you can go onto. I went onto it last week, and I put in 3 years of work history, and I've just had a nice little check through for £175 back payment, and that doesn't include this tax year. So I would really recommend that people go to this microsite to look at the working from home allowance, which, as Sarah says, you've only got to do 1 day in a year and you're entitled to it. So look at it in terms of back pay as well, and see what you can do. And just one final thing from me. Another thing that I thought was that my pensions tax relief was coming at source, and again was automatically on my tax code. In my case, it wasn't. That is a massive amount of money that I should have been saving. So I'm doing quite a bit of work on that. So again, if you hopefully you all have pensions. If you have pensions, look to see if you're getting your pension relief at source. And it's definitely worth a call to the tax office just to double check that. And I think that was it from me, Sarah.
Brilliant, thank you. And it's always really nice to get those little stories as well, isn't it? The real life situations, and the fact that you got a check for your working at home allowance.
Yes,
I love that. That's brilliant. Good.
Yeah,
yeah, fantastic.
I was really impressed. I only did it last Tuesday. The check came through yesterday.
There you go. Well, that might help with the month's energy, mightn't it?
Yes.
With a bit of luck. And funnily enough, when you said about Money Helper, we've got the Money Helper website here, so I've just put that on, and along with some of the other websites that we've mentioned throughout as well that just might be helpful. But I'm just hoping that, you know, all of that together might have really helped. I mean, the Money Helper website, I absolutely back up what you say. There is just so many good articles and help for people. You know, that's the first port of call if I'm pointing people towards other articles. We've also, you know, we pull a lot of that stuff through to the Better with Money website as well, so you can look at our resources section, and I think between the two you've probably got pretty much most things that you need. So that was really all I had to say today. Sharon, I don't know if you had any other questions through that we can answer.
One from Zoe. Are there any resources, support helplines for patients going through long-term health conditions or things like cancer?
Yeah, now I think, Dawn, remind me, is there something around illness and protection? There is, isn't there, on Money Helper?
There is. Yeah. And I think it's on our Money Helper website. What I'll do, Sarah, is I'll have a look for it and put it into the chat. But I think there is something there, and it will give you some links. The other place to look for really good resources is onto our Facebook page, the Money Helper Facebook page. And very often you get queries from people, and you can sort of follow threads through. So that's always worth a look as well.
Yeah, I mean, that would definitely be my first port of call, Money Helper. And the other thing that Money Helper have is if you have any people who are expecting children as well, there's a really nice timeline on there of all the different financial support and what people should be doing at different times, you know, and what they can expect from their employer in terms of statutory maternity pay. So yeah, pretty much lots of information there for different people at different stages of their life and going through different things like illness or pregnancy. But yeah, that's definitely the first place to start.
I've just got one more question to Dawn from Fiona. I can see information about pensions dashboards on your website. Is this something you offer already, or is it something you are planning to offer?
So it's something that we've been working on for quite some time. I'm not sure which website you've seen it on. I have a feeling it's going to be the Money and Pensions one, but it could be the Money Helper. I'll have a look and advise better. But yeah, it's certainly early days, and it is something we're working through. And Laura, I can see I picked up on your question. What's pensions tax relief at source mean? I'm basically what it is when you pay into your pension, you are entitled to tax relief on those payments. Now, Sarah, I think you might know a bit more detail about this than me, so I am going to hand it to Sarah. But basically, it's a tax relief that you can get on pension contributions. Sarah?
Yeah, okay. So the majority of people nowadays, can I just check, Dawn, are you in a defined contribution pension scheme? Or
yes, I am.
Yeah, because that's when it normally happens. So if you're in a defined contribution pension scheme, which the majority of people are nowadays, you get your pay. Then you pay tax and you pay national insurance, and then your pension contribution is deducted after that. It then gets paid across to the pension provider, whoever's investing that money for you, and automatically you get basic rate tax relief at 20%. It's kind of grossed up onto your contribution. But anybody that is a higher rate taxpayer or even an additional rate taxpayer, they can then claim back the difference between the 20% tax relief that they've already had and the 40% that they are owed. And the way that you can do that is through HMRC Online, or you can do it through your self-assessment tax return. Now, the caveat to this is that now there are many workplace pension schemes who have got something in called salary sacrifice for pension contributions. And if the firm that you work for has got salary sacrifice in place, they do it differently. You get your gross pay, then the pension contribution comes off next, and then you're taxed and you're NI'd after that. If you're in a salary sacrifice situation, then you are getting full tax relief at source because your pension contribution's coming off your pay before the tax and NI, in which case you don't need to do anything. So, you know, it's one of these things, unfortunately. Pension contributions can be a complicated matter. But as Dawn says, the easiest thing to do, either to talk to payroll for the company that you work for, just to double check whether you're through salary sacrifice or not. If you're not, and you are a higher rate taxpayer, it probably means you need to go to the taxman and claim back your additional tax relief. Or, you know, if work can't help you, HMRC should be able to. I hope that was clear.
That's brilliant. There's no more questions from what I can see in the chat box. So I'll close this session out if that's okay.
There is one more in there.
Is there some more in there? Oh yeah, one more's coming from Hannah. Thank you, guys. So if someone has had a few pensions opened with previous employees, is there a way to access these before pension age, or a way of finding out what you have?
Yeah, so if you've got previous pensions, I mean, I guess the first thing is to make sure that you keep any previous employers or pension schemes updated with your contact details so that they know where to find you. Most pension schemes will publish an annual benefit statement, which will either be sent to you through the post, or you might have to access that online because we're all trying to get paperless nowadays. So you should be able to find out relatively quickly what you have in those pension schemes. Now, at the moment, by law in the UK, you have to be 55 in order to access the money in your pension schemes. That age is going up to 57 in 2028. But what you can do if you're under the age of 55 is, if you wanted to, you can look at consolidating all your pensions into one. You can transfer old pensions into your new pension. The best thing to do if you're thinking about that is to contact your current pension provider and have a chat with them. They might be able to deal with that on your behalf. The only caveat I would say is, if you've ever been fortunate enough to be in a final salary pension scheme or defined benefit pension scheme, then it's unusual to find people transferring out of those into a defined contribution pension scheme. But again, your provider will be able to tell you whether it's something that they'd expect you to do or not, because if you do want to transfer from an old final salary scheme, you would need to seek and pay for financial advice to do that. I hope that's answered the question, but yes, you can access pensions from 55, not before that, but you can look at consolidating and transferring them all into one if you want to.
Okay, has anybody got any more questions? Oh, there's one more. Oh no, just thank you. Lots of thank yous to you. I was just going to close this session out and ask if you could all kindly complete the evaluation form that we're going to send out after the event. We can then share the resources with you, the slide packs and anything else that's useful that's been discussed today. And we have another event coming up, just to remind you, on the 24th of February. I'll send out the information on that after this event on MSK, and that's been run by Core Clinics. So we'll send the details out to you then. Thank you so much for attending, and thank you, Sarah and Dawn, for your session. It was really useful.
Brilliant. Thanks very much, everyone. Bye-bye.